Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Thank you, Barty. And how we doing in YouTube this morning? Welcome to Trader Lab. All right, thanks, Plato. Well, good morning, everybody. Welcome to Trader Lab. I'm your host, Tom B. The stream's about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis in the intraday developing timeframes. It's based on structured trades that you can vet or reverse engineer that are available to everyone at no cost in the Trader Lab. The idea of Trader Lab is to help traders understand how the market works, why it does what it does, and how at times you can get in alignment with it. Stephen, is there an issue here? Okay, thanks everybody. Yeah, hopefully all you guys can hear okay. I am streaming from Mexico, so one never knows. Um, Internet, you know how it is anyway. No matter where you are. Let's take care of business. Let's move right along. Remember, and the Trader Lab is available to everyone at no cost. It is a community of like-minded traders who come together to leverage their collective experience. This is about you. It's not about me. I'm just someone who's been doing this a while. And after 46 years of this, we've all walked in the same shoes. It's not about that. It's about you got to start in the right place. And starting has nothing to do with how long you've been doing this. It has to do with eliminating as much as possible randomness and getting into a process that can be measured. The only way, in my opinion, at least what I've observed, where you can build a sustainable business is to know where you have a statistical edge that actually favors you and to leave the gambling to somebody else. And while the outcome of any trade in and of itself is 50-50 over a random distribution of outcomes, if you actually can derive a statistical edge over time with a discipline to actually execute, which is very difficult for us because of our primal wiring to avoid risk and to seek confirmation. It's like the catch-22. If you can actually bring yourself to do it, and these processes, you can learn these and leverage off other traders' experience in Trader Lab, you can actually have the potential to create a sustainable business. That's why I created the Trader Lab. It's, part of it reflects what I went through, chasing many different ideas over many years. And I found that I didn't know how to look at the business. It was much more about seeking certainty and avoiding risk. Well, that's not really what you can do in this business. You actually have to accept risk and then learn how to operate in it. So we can't change the business to fulfill our psychological needs. We really have to change how we approach the business. And then if we understand what the business actually is, then maybe we can solve for it. That's what the Trader Lab's about. Maybe it'll save you some time and maybe some brain damage. One never knows. And it's definitely not for everybody. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Remember, anything you hear anywhere, whether it's Trader Lab or any chat or any Instagrammer or any market guru, the holy grail of trading, well, it doesn't exist. And if it does, everybody would already have their ATM in the basement. So let's accept there is no quick fix. But it doesn't have to be complicated. I know for myself, I thought the answers were hidden in the complexity. Well, let's maybe go from a different angle. Let's go from a simple point of view in a random environment and remove the complexity so we can get a clearer vision of what's actually happening. Now, the thing about clarity is not predictability. They're separate. Clarity is a definition of process. So clarity is almost formulaic. Market is random. Something needs to be anchored. And I discussed this in my primer webinar, and it's all available to you at no cost in TraderLab. That has about 34,000 views. Why is it a popular webinar, right? Because it really breaks trading down into its fundamental components, and that is a random environment. Well, if we equate trading to gaming, which is really what it is. Now, you may think, well, trading is not gaming. Well, what is gaming? Think about how casinos operate, and then you understand trading. And that is they only play games with statistical edge that favors them. And once the cards leave the deck, it's all up to the random distribution of outcomes. The cards are random coming out of the deck, and the way the gamblers play the cards is random. So what do the casinos control? Only the games, right? How they play them. They play them exactly the same way. So if we have a proven business model, then why are we trying to do something different? We already have a successful model. What we need to do, in my opinion, is plug our trading into a proven business model. So we already have the business model. What we have to do is adapt what we do to a proven model, not try to create something that is not aligned with the business you're trying to be in. And most of us are trying to fit this business into our comfort, our confirmation, certainty, avoidance of risk. That's our psychological need, our comfort. Well, you're going to be uncomfortable every moment in this business because it's random. So we got to solve for our discomfort. And the way to do that is statistical probabilities, not certain. Hope it makes sense, but that's the business. Now, we may all want it to be something else. I get it. Me too. But not so much. This is how the market works. It's very simple. Auction market theory. Why do we have a market? It's trying to figure out a fair price. It's a shopping experience. So I always go back to shopping because that's really what's going on. In your store, if something's on sale, you throw 4 in the cart. If the price is too high, you don't pay it. Only if you need it for the casserole tonight, like that can of tuna. But you're not going to get a line outside the store for the tuna. You see? So if that's the case, then the auction is really a price discovery process. Now, how do we see this in action? The volume profile represents price and volume. It's not an indicator. It is showing us where demand might lie and where there's lack of demand. Price gets too high, volume dries up. There's no line outside the store for a $4 can of tuna. But if the tuna goes down to 25 cents a can, even if you never want tuna, you're going to throw 10 in the cart, right? So we see that as manifested in rotations. Now, as day traders, we are concerned with rotations or time frame. And I always think of this, and I always like to repeat this, it's a vertical integration of time. And that's really what's going on. And then the context, what's the condition in your time frame? Well, are we in a bull market? Some say yes. Or have we turned to a bear market and we already have the high of the century here? I don't know. Do you? Well, if we know we don't know, then we are actually trading inside of multiple time frames. So we could be trading short-term rotations based on time frame, but we're inside intermediate time frames and we're inside a higher time frame. So what are we trading our time frame as day traders? Well, you can be short inside a bull market. You can be trading both sides, right? So you have to define that. And your business plan is based on those rotations, so you can isolate them. And then Bookmap's the order flow tool that gets us kind of down where the rubber meets the road. Okay, and these are what some of these trades might look like. There's 60 PDFs of structured trades, and all these are. There's no plug and play. Don't bother if you're looking for a quick fix. If there was a quick fix, I can assure you I would have taken it, and everybody else, everywhere else on the planet who wants to do this as a career. No quick fix. You have to roll your sleeves up and say, I'm going to do something that most others cannot do. And you're not going to accomplish it by doing what they do. You're going to accomplish it by differentiating what you do from what they do. Does that make sense? So what does that mean? You're going to have to change your beliefs as far as what the business is. Now, let's go take a look. What's going on? Let me try to get here. And I'm going to explain some things to you. And remember, you have to vet everything, no matter where you hear it, whatever. Okay? So, this is the RTH Open. It's 8:30 Central Time, where I am at the moment. And here's a couple key levels. Yesterday's low. What's under yesterday's low? Stops, thank you. What else do we have? The ETH, volume point of control. Now, when you hear these terms, if they're foreign to you, there's tons of literature out there in internet world on volume profile or market profile. Very simple. A point of control is just language for retail. Remember shopping. What is a point of control? It's the highest volume for a session. So the ETH is its own auction. What's too high, what's too low in the ETH? Well, the high volume is the retail price. So the highest volume is here. Yesterday's low is over here. We have stops down around 85, 86. Overnight mid. Somewhere down here, ETH low. There, ETH low. And let me just check one other thing. Okay, ETH low is here. So there's a possibility to go south. I know you're going to like this, or go north. Why might we go north? Well, yesterday's volume point of control, or the highest volume or retail price, is here. So this is called value area low. 1 second. Fair price from yesterday's RTH, and then the ETH high. So we have ETH low below us, retail price from the ETH right below yesterday's low, potential to come down here and check it, and value area high above us and ETH high. So it kind of sets up, because we're opening in yesterday's range inside of the value area, it suggests the market is in balance. So we can get two-sided trade starting out. So let's see what it does. So when I'm looking at this, I'm going, well, there's a high probability of getting here. Let me just try to give you some statistics. One moment. So about an 80% to get here. Taking out yesterday's low, about a 53% probability. A 41% probability to take out yesterday's high. So, you know, the previous high or low, 87%. ETH high or low, 97%. So we're kind of opening in the middle, and we could, go either way here. But what we do know from yesterday is the market is short. So the market tends to go down to go up, and tends to go up to go down. So if the market goes down, we have to see if we get continuation or if we come across the range. So that's the nature of it, not the prediction. So let's look at the behavior. This is the retail price from yesterday. This is the retail price from the ETH, and then we can either come to or go up. Lovely. Let's look. So the first trade I was looking at, and I don't know anything, of course, I just go, well, it might do this, it might do that. Where might it do it? That's what I look at. Where might it do it? So, and there's a couple other things. 23 is a big price, and 30 is a big price. One moment. I might get interrupted here for a moment, so it might take I might have to drop off just for 5 seconds. We'll see. So, market opens, so it moves higher. This is my first target, and then I'm looking at the ETH high, and I'm going to look to see who takes control. Because I'm opening where I am in value is like a fair price. This is the highest volume or retail price from yesterday, RTH, and my ETH high is here. We're kind of in what's it going to do? Now, for developing traders, the best thing to do, in my opinion, is to wait, because we can anticipate two-sided trade here. So let's look. So I have a high probability of getting here and taking out yesterday's low. So my inclination is, when we're rotating up to here, is to be looking at a short to come down here and maybe down to the overnight mid. So that's kind of where my brain was on this. Let me show you. So I get my selling, come back up, and because we're in range and value, this is my resistance. So right here, teeth are chattering because I know I can get squeezed out very easily. I have a sweep here. The sweep as an order flow tool suggests possibility of a counter rotation. So I get that. I come back up. So now I'm looking at the short. I take a short here. So I got the sweep. And I'm also very conscious that, this is an aggressive trade. I found my buyers here. So right here, I have support. So this, for me, and I'm not saying this is a good trade, I'm just saying it's a trade, this was a short. I have to clear and scale ahead of where the buyers showed up, which is here. So the scale is there, and then, looking to come lower. Get taken out. Now, that's okay. So that was the first trade. Now, when I come across the range right here and I see the strong buying, then it was time to get long. Right when I come across the range. So let me try to show you where this happens. So this is my scale, and then I'm going down for here. Okay, where this liquidity. So that one, that's a scratch, and that's fine. Now, ETH high. So once I'm above this, then it's longs only. This liquidity is here. Get the ETH high. This is called the liquidity trigger. And now there's no more shorts for me at this point. So this is where I got long. Would have been nice, someplace else, but it just wasn't in my plan. I just go with the flow. This is liquidity trigger. This is in Trader Lab. So this is where the long came in. And then 23, this, and this is from yesterday. It's a key level where in the stream yesterday we were taking shorts. There was two of them at 23. It was an important location. Look at the reaction. It's already on the chart up here. And the other part of this is value area low was an outside edge or possibility. And then if I come back inside, the next target is value area high. But I had 23. And you'll notice we come to 23. So coming across the range, 23 was a target. Then it's either that's it, and we're going to rotate, or 30 is the next level. So let's see what it does here. 30. Now, the 30 is a high volume area in an intermediate time frame. Retail in a higher time frame. Let me see if I can show you some of this. So here's the 30. This was a target. So this sets up a target. So we have 23 as a target there. We get a counter rotation. Now you can be done with this trade here. Or, now this is more complex. We had, don't forget, we had an order flow trigger there. We have a similar trigger here. And then we have this with 23 as a target. You break below, this can be resistance. You break below, this can be, so in other words, this is support, I should say. Break below its resistance. This can be support. Break below its resistance. But what do we have here that we didn't have elsewhere? A sweep. So we have an order flow phenomena and a location. We have an outside edge. Now, this is not necessarily a long. I'm just saying it's a potential location subject to your plan. Remember, 30 is a target, and it's right there. Now, we get a sweep at 30, and we get something called VPOC migration. Now, this is going to be a structured trade. You'll see it. And it's called, this is VWAP to VPOC. This is a structured trade. And I was talking about this in Trader Lab. In fact, I was talking with another one of our traders in Trader Lab about this trade. This is a reversion trade. It's a structured trade. You have a sweep, you have the VWAP, and this would be your scale. And the 30 is your resistance. It's right there. So if you just took this trade, structured trade, it'd be there to there to there. And then you could be done with that trade. It's kind of, I kind of think of them when they're structured like this, trading in chunks. Because here was where our sellers were, and they're still sitting in the book. This is our buyers to there to there. Trade could be over, you're back in your Barca lounger. We have another scenario here also. At 9:30 Central Time, which is right here, we have something called the IB. The IB is the first hour's high and low. And given the lay of the land, we have over a 90% probability to take out first hour's high or low. So here's your situation. You can go from here to there, if you're running a 2-lot, be done. Or you can go from here to here, and with that 90% probability, have a trailing stop under here, not move your stop, and accept that you might get taken out, or you'll get a counter rotation and then take this out because there's over 90% probability. Let's see. And the reason I'm saying you can do this or that is because that's trade plan and number of contracts. Everybody comes up with their own plan. Watch the behavior. Look where we come back. Here. If you are micromanaging, you'll get taken out, you see? So we come back to VWAP. Where was our sweep? It was here. If you kept your stop here and you bit your nails and you dealt with your fear of giving it back, which is very hard for us because you go from euphoria to depression. You know, here, oh, it's okay. No, it's not. You see, the only way to manage those emotional states is to know what you'll do before the market does its thing, because this is random. So what needs, and this is again, I'm referring back to the primer webinar I did. This is the thing, anchored inputs. You need anchored inputs. And the thing about an anchored input is to know what you'll do. When you bring a trade plan to randomness, it's the same as the casinos bringing their games to randomness. We bring our game to randomness. It isn't made up here. And I know we're all responding to, like a video game, and we're stimulated and we're being triggered, emotionally. That may work when you're playing a game. This is a business. So the way a casino operates is our business model. They don't change the games, no matter what happens on the last hand, do they? Well, if that worked, they'd be changing it all the time, so they don't do it. Well, why do we do it? Because we don't have a plan when we come to market. Market's random, so we have to accept randomness. So we have to know how to react in randomness, what to do. And before you ever come into market, before the day starts, you know what you're going to do. You don't know what the market's going to do. So you come in with statistical probabilities. And how do you get that? Well, you have to extract them. And there's loads of information out on the internet as far as and how to extract an edge. It's not complicated, but you have to be willing to do the work. The idea of the Trader Lab is to help you build a process template. And trading is not complicated. It is random. You need to understand. You cannot create certainty as much as you want to squeeze the risk out and get quote confirmation. It doesn't exist. So if you're trying to bend the business to fit that psychological need, you're going to be very disappointed because you're not in an environment where it exists. Just something that you should be thinking about, maybe. So let's go take a look. What do we get here? Sweep long to where? 30. That's our resistance. Trade could be done. Pull back here. What do we do with this? If you take a trade here, well, I don't see much to lean on because your risk is out here. You got the mid and there's stops here. The market could just as well come under here. Why not? Pick these guys off and then come back here. That's reversion. So this is not a long for me. This is a long. This is what's happening. Why? Because of 30. Now, there's another trade that shows up here. We have two trades. We have the IB failure, which is a short, or we have the IB continuation. Well, 30 is an obstacle. This and 23 was an obstacle. So you can kind of see we're coming up. But what is the market condition? Where are the stops? You're going to say, Tom, where are the stops? What about yesterday's high? And what's the thing I always talk about? It's kind of the market mechanics. Market goes up to go down. Market goes down to go up. What did we do yesterday? Market went down. What did we do today? Took out yesterday's low. And what does that do? When we take out yesterday's low, we're going to get more shorts, more selling. I was short on the open, fine, and then turn around. So now the shorts from yesterday become buyers. And where's the stops above yesterday's high? Are we going to go get there? I don't know. What do you think? I don't know. So since we know we don't know, and we know 30 is an important piece to this, if I can break the 30 and come back, it sets up something called the IB continuation trade, which is a long. Oh, well, there we are. So not a lot of trades, right, guys? What is the objective of trading? Oh, it's not to trade actively, in my opinion. It's to trade intelligently and exchange minimal risk for range. How do you make profits in trading? It's not by playing a video game, at least as far as I've ever figured out. It's about understanding market mechanics. So we've had a couple of trades here, right? Tons? No. 3, 4. But what are we accomplishing? We are getting the range. We are getting risk neutral. And if we can get risk neutral, this is the IB continuation right here. We have two things, 30, which was our target coming up, in the IB continuation trade. So what do we know here? Reversion to the long side. What do we know here? Sweep at 30, that's the target. Rotation down. What do we have here? VWAP. Now this, the risk is to there. If you take this trade, your risk is to there. Does that work for you? I have no comment. My trade, it would be here. And I could be done at 30. And then if I break here, this is a structured trade. The IB, I could put a long on here. Or, let me give you the ors. Or, I'm running, this is based on two lock configuration. Remember the idea of Trader Lab. It doesn't matter how long you've been trading. The idea of Trader Lab is to help you understand market mechanics. How does the market work? Why does it do what it does? And then you can extrapolate process. Trading is process, not predictability. This, if you're out of this trade here, is that an okay trade for you? Getting along from there to there, being done there. Then you sit through this and you go, I don't know. What happens if you shorted this? Let's look at that. What would happen? Your short would be a reversion trade to there. Now, I posted in Trader Lab, this is not a short. It is an exit. So the way I look at it, not something just the way, because it's trying to be, let's just say, as an educator, and I've trained a lot of traders over the years, It's not flipping and flopping like a flounder on the dock. It's primarily going in one primary direction and then using the counter trend. So with the targets for either exits, or if you get a sell trigger, an exit. At some point, when you can navigate a dominant side, the counter trend trades, you can either take counter trend trades, or better, I think, is use the reversals for exits and trade management, not the flip counter trend, you see. Now, that's up to you. If you can't trade with the dominant side, in my opinion, you're going to have a problem, because you're only going to be, now you're going to be FOMO and triggered, emotionally triggered. When you develop discipline and you can deal with, let's say this is the high of the day and this thing goes wherever it goes, and you don't take it, but you manage your trade. As a developing trader, what's more important? It's discipline, because you can always develop further. So even this, let's say you took the long and you're disciplined, you scaled and you exited, you're flat. You see this, it's a counter trend trigger right here. You don't do anything. And you're starting to feel FOMO. I should have got short. Don't we all feel that? But what happens? And there's a little bit more to this. The value area high, this, and 30 are outside edges. That's why it was a target. When you break above it, you're outside of value, which is suggesting higher, and we have the IB continuation trade, which is, this is the first hour's high. This is a structured trade. So that's your long. If you just went there to there to there, teeth chatter, you're flat, and then you start again, you put it back on here. Are you okay? That's structured trading. The key to this business, oh, and yesterday's high. What's at yesterday's high, you ask? Stops. So this is next target, and then trade management. And now you'd be current. Not a ton of trades. Oh, that's right, I forgot. What are we doing this for? Profit. Would this work for you? If the long is there to there, and then long from here, and you're trying to come up here, this area, would that work? Does that help you be a profitable trader? The last long continuation trade, let's assume you got in at 30 or 32, and you're going to try to get into the stops at 50. That's almost a 20-point trade plus a scale. Does that put bacon on the table? That's the point. This is what trading business is. It's not a video game. Are you guys tracking? Does this make some sense? Joe, it's not mechanical. A short at the value area high. Now, here's the thing about the value area high. You could sell the value area high. 30 was resistance right here. But nothing is mechanical in trading. We have to look at the full picture. Nothing is isolated. 30, this is resistance. And the value, so right here is resistance. That's why 30. You see, right here. That's why it's resistance. And you can see the behavior. But what else do we know? Stops are here. So when you're looking at the pieces, you really need to be thinking not about something that's just on the chart. It's where's the fuel? I always kind of think about this. The way is that who's ever on the wrong side, they're going to have their stops in the same location. In other words, if you were short from yesterday, where are you going to put your stop? Well, over yesterday's high, right? Well, if the shorts are the buyers now and new buyers, we as day traders are long, and who else are buying besides us? The shorts. So we have the buy stops. You can see them here going off. And we have new buyers like us down here. Doesn't mean we're right, of course, and we have to deal with these rotations. But once I get out here, I'm outside of value, which means the market's now rejecting at this point the perception of valuation. This was the highest volume from yesterday, and it's too low, so it's mispriced. So then, if this now was too high and we get above it, I'm outside of value. Now I'm going to go for potentially to the stops. And I look at my order flow and I see this liquidity coming up here. So chances are the way high, let's say icebergs and those who need to move a lot of contracts, they need the liquidity. Where's this liquidity come from? It comes from us and others. So the buy stops, this is where the liquidity is going to be. Remember, limit orders are passive. Aggressors are market orders. Who becomes potentially the market orders? Buy stops are market orders. So if I have limit orders sitting out here and potentially a large number, if we come up into the stops, you're going to potentially see a lot of icebergs taking the other side. So that's why mechanically value area high is not a short. I'm not saying it won't be, but I also understand I got to look a little further and think about how the market works. So if you're sitting short, let's always think from both sides here. If you're sitting in a short position, what are you doing right now? Are you using the counter rotations to cover? Doesn't that potentially build in buyers on counter rotations to support this? You see. So if I get a counter rotation and I'm still short, I might use that counter rotation to buy, to cover. So I might have built-in buyers in here or not. The thing about it is we never know what it'll do or the path. So that's part of the joy of randomness. Just saying. Anyway, I hope that makes some sense. Does that make sense? How we doing in YouTube? How we doing in YouTube? Please give a like if you're visiting in YouTube. This is the Trader Lab. Guys, trading doesn't have to be complicated. I know our nature is that more gives us more, but more actually creates the problems, unfortunately. Seeking certainty is the problem. There's no certainty. So we can't get it. We're not going to get it. So we have to find how to work in uncertainty. Very much against our nature. So, and if you ask anybody who's been doing this for a while, we've all done the same things. I certainly would have loved to find certainty. I built trading systems trying to squeeze risk out. Still ended up in the same place. I just did it much better. Do I always put my stop behind the liquidity level? What if there is none close to? No, I don't put my stop behind liquidity levels. I target liquidity levels. I don't, and if I have a reversal or a liquidity trigger, I might use that. But always, there's no always in this. It is process. So for me, and this is not a recommendation, my stop would be no place near the noise. Market has to break structure for me, but I'm trading a different time frame. I'm looking up in here. Now this thing can come all the way back here and then either go there or never get there. This is part of the dilemma, then, because we don't know what it'll do. So the market rotates. I mean, it always is going to, look at these rotations. It's just the nature of it to rotate. And because what happens is in all time frames, as you think of them, and I don't use time in the intraday because it's not clock based, it's participant based. So it's a little different way than most of us think of this. We all think of time frames. That's what we had before order flow was time. We didn't have anything else. So we all grow up thinking time frames. But in here, it's not time based, it's participant based. The other part of this is retail traders who are risk adverse, which is all of us, are going to micromanage their trades. They all do the same behavior. We're all lemmings, unfortunately, jumping off the cliff together, and they micromanage, so they pull their sell stops up. Well, at some point, if we run out of buyers, who become the sellers? The sell stops. Then the market comes down into the stops. So what happens then is we have to stay outside and be willing to give this back if we want to go higher. If we're micromanaging, then we're just going to, that's what we're going to do. And we're going to have to be okay with, for example, right here, this sets up a counter rotation. This sets up an upside rotation. Where's up, where's down? Well, I can't figure that out. I can see it in hindsight, but why wouldn't the market find its buyers right here and go on to make a new high? Because I do have a sweep and I have a micro trigger. This is a trigger, but it only went there. You see, I can't tell where it's going to go. But if I pull the lens out, and I still don't know if it's ever going to get here, I have buy stops here. So my target is here, and it doesn't have to ever get there. So before the trade gets put on, I have to be willing, based on statistics, to honor my plan and my statistical probabilities and not predict what it'll do. But I do understand how the market works. And I do understand that if the market is short, which it is, that on counter rotations, the potential is for shorts to cover. On counter rotations, if you are short, you'd be covering. And then, so any downside rotation, I might have buyers in here, plus buyers like us who might be trading in these shorter time frames. And again, I don't know, it's just possible. So why would we not be going for this if we know there's buyers here? Don't we know there's buyers above yesterday's high? So guys, if you're beating your head against the wall with all this complexity and all the stuff you think you have to learn, you might just be chasing the next shiny thing. It's our nature. Somebody says, oh, order flow. Somebody says, oh, this, oh, that. If you can't understand the basics of how the market works, that's not going to solve it for you, because we're always seeing phenomena all over the place. So it's a filter. Where are the primary locations where we might be able to establish statistical probabilities? Then how do we bring order flow into this? I call Bookmap the tip of the spear. If you don't understand how to trade, Bookmap is not going to solve it for you. Bookmap is a sophisticated tool. This is like a laser, But if you're a surgeon, don't you have to learn everything that goes before operating with a laser? You see what I'm saying? This is not where you start. This is really where you add finesse and refinement. But you need to put the pieces together. In TraderLab, we've integrated the pieces and made it as simple as possible. Now, when I'm saying simple, don't take that the wrong way. Simple, you need simplicity in order to define process. You can define process, you can organize. Think about how a trading system works. The trading system is a conditional process. And I always use, when I wrote systems, it was really, what is a condition? If this, then that. If not, then what? If a condition was true, it would take you down. If you were to graph this thing or put it on like a schematic branch logic, you could actually draw a little schematic out of it. So if something was true, it qualified certain trades. Then, so you're filtering trades that are only qualified in certain conditions. If the condition changes, then you don't have the same trades. Most of us, as we develop, it's basically plug and play and everything's the same. Well, how can it be that the condition of the market is always the same and the trades are always the same? How can it be that VWAP to VPOC trade, which was the last long, no, there's two longs actually here. This one is a qualified trade in this context, and the long here is another qualified trade going for this ish. I say ish because targeting is buys, stops for the shorts. This is market mechanics. So these are qualified. In other conditions, you cannot take this trade because it won't work statistically. Randomly, sure. Statistically, nada. Same with this one. The long here. Different conditions, you'd be just taking a short out of here to come back here. And what do you think happened right here? 30, remember? Right there was a target. Clear 30, that's the next target. How complicated is this? I'm going to suggest it's not complicated. The hard part for us is randomness, counter rotations, this kind of jiggle, like, oh, it's going to zero. You jump out of your trade. You know why you do that? Same reason I did it. Fear, FOMO, all that emotional triggers. That's emotional decision making. Doesn't work in this business. So even though we have the emotions, what we need to have also is statistical probabilities. That's tangible. You can touch that. You cannot touch random rotations. And you cannot change your business plan because of randomness. Something needs to be anchored. That's the facts. So if you can't anchor it, you're just gambling. And, I always say go to casinos, get the ticket to the buffet. That's basically really, what the business is. So you have to understand the business process, conditional processes, statistical probabilities, develop the discipline to put the statistical probabilities on your side of the decision-making matrix and manage your fear. And if you can't manage your fear, you're always going to be under control of the lunatic under the hood. You're not going to actually be trading with an edge. The business of trading is edge. You have to leave your emotions at the door and learn how to manage them. The only way you do that is by having a statistical probability. Remember, tangible. Emotions are not tangible. They're chemical. Can you recognize the difference? And can you do something about it? And if not, and if you haven't solved it, and you're waking up in the same place, it's the same as all of us. We're all waking up in the same place until we change what we do. And that's why there's no holy grail, no secret sauce. All the stuff you see out in the internet world and Instagram and all the influencers about the only one trade you need and how somebody made $1 bazillion with this one thing. I hope you go running with your hair on fire in the other direction when you see that, because it is absolutely, and again, personal opinion, personal experience, ridiculous. So it's appealing to our primal needs. Quick fix, easy, and it's great marketing. But that stuff's been around since I started in business, and that was 1980. Same stuff, different label, different marketing medium, still the same. Just saying. Hope that makes some sense. Not to offend anybody, but that's kind of what this is. Are you guys following? Please give a like if you're in YouTube. And the other thing is, if you're visiting in YouTube or you're even new to Trader Lab, there's a library of webinars. Make sure you take advantage of it. There's also a document section and a lot of contributions. Trader Lab is a group of like-minded traders who come together to leverage their collective experience. This is about you. It's not about me. I'm just a guy like you. All I've done is I've had 46 years of this, professionally and otherwise. And it doesn't mean I'm not human. It means I've done the same thing you've done or are doing. We're all the same. And why is that? We're human. It means we're all wired the same way, and we all have the same obstacles. So that's something to keep in mind. So can you change your outcome, or are you going to keep waking up a trader groundhog? That's what I named it for myself. Work hard, curve fit, get excited, come back the next time. Still have winning trades like I've always had. You too. We all have winning trades. Gamblers have winning hands, but they don't walk away with the dollars over time. The casinos do. So I've figured out, unfortunately, it took me a long time because nobody was an off-floor trader. When I started, all my buddies were floor traders. So that's a different business, right? So I just didn't understand it, I didn't realize that and I was trying to do is fit my psychological needs. Let's squeeze the risk out. Let's get more certainty. Isn't that it? Well, what is that all about? That's primal. Avoid the saber-toothed tiger. Let's be sure there's no apex predator behind the rock. Let's create that certainty. Let's squeeze the risk out. Let's wait for confirmation. Now, let's be sure. Well, how can you be sure? Well, if you can't, then you can't solve for being sure. You can't get confirmation. If you can't get it, then what can you get? You can get randomness and potentially a statistical edge. That's what you can get. And where can you get it? You can get it in a trader lab. And you're going to have to change your beliefs. Hard to do. Because you have to kind of rewire yourself to understand your psychological stimulus and understand where it comes from. It's trying to protect you. It's not the enemy, but it is a problem in a random environment. So the control of that chemical stimulus. So these things happen in your brain in spite of what you want to happen. It is such a strong, think about our species. We're on the planet here because of these chemicals that evolved over millennia, and I'm sure it's longer than that, you know what I'm saying, that protected us and allowed us to evolve and survive. The apex predator. When you're in an area like this, right here, right now, there's uncertainty, isn't there? And we're wired not to participate in uncertainty, but to seek certainty. So we hesitate, we wait. Now, here's the interesting thing about that. If you're waiting for certainty and I have uncertainty, which one is more certain? How about they're equal, except you take more risk to buy certainty that doesn't exist. I take less risk in uncertainty. So over time, my trades are just as uncertain, except they have a statistical probability. So while the outcome of the individual trade, and they're all random and uncertain and have a 50-50 probability on an individual basis, who has a better edge? I do, because I'm in the same uncertainty, but I'm managing my uncertainty. I can't get certainty, but I can get probability that favors me. And if I can do that and accept that losses it's not about my ego or getting approval or validation from the market. It's about a business plan, and I am going to pay the gamblers just because every business, no matter what it is, has overhead and costs of production. This is not validation of my, and getting self-esteem out of this. This is just business. So let's approach it like a business. That's what Trader Lab is about. Understanding the business of trading and not trying to bend trading to your psychological needs, but understanding the actual business and what you need to do to change, to have an opportunity to actually create a business. Is that a logical thing? And is that worth your time and interest? And does it make sense maybe to visit Trader Lab? I can tell you right now, if you're not willing to go to work, roll your sleeves up, tear down the things that don't work, and rebuild and retool, and push back against all the things that you believed that trading was, then Trader Lab or any other thing, any other education is not going to help you. It's not going to solve it for you. That's why it doesn't matter what you do or what education you take. If you can't create discipline, you're not going to succeed. That's just the way it is. And then it's, how do you get discipline? That's what vetting is about. That's what getting one specific trade, reverse engineering it, and making it your own. In other words, you could teach one trade to another trader with confidence, because you need the confidence and the statistics to be able to just put the trade on and say, this is interesting. And it's like a curiosity. I wonder what's going to happen. When I put a trade on, I have the same emotions. I'm not sure. I'm fearful. Yes, fearful. Why? I'm wired. I got over it. I don't like it. What's there to like about fear? Except It's a component of the business, but I've detached myself from the outcome of one unique event. I feel it. I don't respond to it. And that comes from enough time and enough experience and tangible metrics that give me control over what I call the lunatic under the hood, Hyde, Jekyll and Hyde. Jekyll's, Dr. Jekyll and Mr. Hyde. Jekyll's a scientist, professional, analytical. Hyde is the lunatic. Well, fear and anger trigger emotions, but the market has certain things that are true. And that's why this is a target. And again, it's random. But if you understood market mechanics, the last long was here. What do you think? This is the last long, and this is a structured trade that I've shared in the Trader Lab. It's right here. Would you be okay going there? I don't know. Me, I have no problem with this. Do I need to be trading this, that? No, I don't want to. Where's my edge? This is a structured trade. This is my edge. Now, do I take stops? Sure. Here's the other piece. If I'm trading to here, I can afford to take stops because I'm trading range. And that's just my plan. I'm not saying it's a good one. You could probably come up with something that works, will work better for you. I found for developing traders, and even me, I'm not here to, I'm just here to try to take a couple of good trades. And what were they? Well, besides reversing out early on, this is a long, which is a Trader Lab structured trade, to 30. So there to there to 30, right? There. Then breakout of the 30, then going for yesterday's high, which is here. You could be done. Get back in your Barca Lounger. Just trade to the targets. Why? Because the icebergs need the buy stops, the liquidity to unload. And what do I have up here? Resting liquidity. So here's your choices. Finito, Barca Lounger, or trailing. Subject to. That's a Trader Lab, guys. It doesn't have to be more complicated. Now, if you're looking for action, that's okay. This probably isn't for you. My objective in Trader Lab is to help traders understand the business, how it works, and to potentially build sustainability. It's not for everybody. Don't you wish trading was for everybody? Traders who jump from chat to chat and idea to idea and shiny object to shiny object are going to have a problem, in my opinion. Because if you keep jumping around, in 1 second it's, you're into order flow, but you can't understand basic market mechanics, you're on your way out. And if you've been doing that, you have to step back and look at the results. That's all. And if you're doing what I did, and what I did was build trading systems to try to solve the problem, all I did was create the problem and do it better. So I didn't fix the problem. I did a different derivative of the problem because I thought by doing back testing with a computer, in other words, writing code, which I did, and then doing walk forward testing, that I could bring yesterday into today. Well, yesterday is not today. Every day is unique. Every moment's unique. Market can change on a dime. It could do whatever it does, So, for example, once we get into the stops up here, and I'm going to be watching the liquidity, you could just be trailing. Where's the high of today going to be? I have no clue. Well, if I don't know, and you don't know, all I know is now I've got my stops coming out. I still see them, and I have resting liquidity up here. And you'll notice in the limit order book, that's why this liquidity is sitting over here. I can look over here, see what's in the book, and I know everybody else who has a high tier order flow tool knows the liquidity's there. So as I come up and this is not a recommendation, I can either be done with this trade and be perfectly okay with it. Wouldn't you be? Considering this is the last long, would you be okay with this? Do you realize you could trade this with a 2-lot? And by the way, I don't trade a 2-lot, and neither do many traders in TraderLab. But when you're developing the trader, even if you are trading micros because you're vetting a trade plan, think, what would this mean for you? And nobody gets in at it, so you're in an area 32, whatever, 31, stop is below here, and you go here, and you're done. That's almost a 20-point trade with a micro and a scale. So you'd have 20 points in the trade, one trade. The way I kind of look at this, at least for myself, and again, I'm not saying this is the right thing for anybody, it might be the worst thing. I can afford to take a stop and not be emotionally disturbed. Now, part of me is disappointed, that's emotion, but I'm not disturbed because I'm trading this. So if I take a stop, a couple points goes out the window, overhead and costs of production, but over time I'm getting more of these than I am stops. That pays for the stops. You see what I'm saying? Does that make sense? By the way, if you're interested in this, first of all, give a like, support the channel. There's no cost for TraderLab or this stream. It does rely on your support in the sense of a thumb up. Doesn't cost anything for TraderLab. I'm sure you guys have been to many chats, paid many dollars, and if you're waking up with Trader Groundhog Day, welcome to trading. Working hard, waking up in the same place. It may have nothing to do with your intent. It may have to do with your education and the next shiny thing. We're all subject to that. Me too. So, many years ago, when I started, we didn't have PCs. We didn't have an internet. And I remember jumping on a plane, going to some seminar with some great thing. And, we're talking staying at a hotel, paying, 2 days of seminar and walking away, just like you guys, with nothing that was usable. How many times have you done it? Except now you can do it online. How's that working out for you? I'm not saying the TraderLab's the answer for you, but I'll tell you, there's no cost for it, and you can access it just by using the link in the bottom of YouTube, and then you get access to the Bookmap ecosystem, which is order flow with a high-tier tool like Bookmap. How does this thing work? How do you take this and integrate it? How we have other streamers, stocks, options, crypto, order flow, of course, options, market maker behavior, algorithmic behavior, a lot more, and there's no cost for it. And why is that, by the way? Why is there no cost for all this? Well, Bookmap not only invests in its product, it invests in traders. And yeah, is it selfish? Nobody's altruistic. What is it? If you succeed, they succeed. Who do you know who's investing in you? I don't think there's much of that going on. But Bookmap made the decision not only to create a high-tier, constantly evolving product, but also to invest in you, and that pays dividends also for Bookmap. So that's why this exists. So you can keep paying, of course, and whatever you get, but Bookmap is doing something that I haven't seen, that I'm aware of at least, that's being done elsewhere, and that's supporting developing traders. If that's important to you and that's the kind of education you want to take advantage of, well, it's still here and there's no cost for it. You should take advantage of it, that's all I can tell you. And it's not limited, to what I do. My objective is to help traders understand the business and build a proof of concept for them so then they can take it forward. If you can't do this, then you probably won't be able to do anything. So basically, can you learn a process? Can you develop discipline? Can you do a proof of concept? If you can prove to yourself that you can develop metrics, that you can measure it, and that you can develop the discipline to wait for your bus, your trade that has an edge, and not play a video game and not do what most retail traders do. The failure rate's over 90%. You guys know it, I know it, and you have to also ask yourself, what are you doing different than what they do? If you're doing the same things they do, which all of us have, and most of us are still doing, how can you expect a different outcome? Just a question. This is important right here. So this was our resting liquidity, right? We still have a lot of buy stops going off. I don't see exhaustion yet. Do you? What is this telling us? This is saying here, I've got buyers. There's your delta. I've got my liquidity taking the other side. And as long as I still have buyers here, stops, and I keep going, I can hang in here with this thing. Do you know that? If you have an order flow tool and you take the time to learn it, it gives you more insight. This sweep says potential rotation up. This is your obstacle. Here's your limit order book. Here's your absorption. The sellers are absorbing the buyers. This is the order flow. But look what I see. If right here, I'm watching the buy stops. What is this information I'm getting? What can I glean from this? Here's what I glean. I'm watching the buy stops. Now, as I open up, look what you can do with order flow here. As I open this up, I can get down to milliseconds with this tool. See it? Now, obviously, I can't do anything with that, but we can see as much detail as we need. So as I pull it in and slow it down, I'm aggregating, and now it's starting to put this information together. So I can spread it apart, see more minutia, or I can pull it together. What I know right now, this is support. And now I'm watching here, there's less buy stops. I'm over yesterday's high. I might, at some point here, get a counter rotation. So now my trade plan would suggest to me, I'd already know what I'm going to do. I don't know what they're going to do. Do you? Remember, this isn't a business of knowing. This is a business of maybe. Maybe I'm running out of buyers. I got less stops there than I got here. I already absorbed these sellers. I've got selling icebergs here. I've got liquidity up here, and this is my area. You could be done with this trade if it comes under here. Are you okay with that? See? So those answers, if you're going to say, Tom, what's it going to do? I'm going to say, I have no idea. And why would I even say that? Because it's a truth. So I don't need to know if I know I can't know. What I do need to know is I have sell stops coming out here, and I have less buy stops coming out here and here. I know the market is long. So what does the market do? On all time frames of fractals, market goes up to go down. Market goes down to go up. Market goes up to go down. Market goes up to go down. Market goes down to go up. Market goes down to go up. Market goes down to go up. Why is it going up? Because we were below yesterday's high. And the shorts, what were they doing? Covering. Who are the buyers? The shorts. What are we doing? Buying. We're riding on their coattails. Now, what happens if the market gets long in different fractals or time frames? Well, now the market's long. Well, if I run out of buyers, I'm not paying that. Then what happens? This is what happens. So, do you see how it might work? So, if you can think like a retail trader, but not act like one, it might help you develop edge. And if you understand edge, your job is not to predict anything. It's to align. And then whatever happens, happens. Why might the market come down? Because the market's long. Why did the market go up? Because the market was short. Where was the fuel? Above yesterday's high. What happens if we exhaust our buyers at this point? The buy stops. If we run out of buyers, I'm not paying that. Then what might happen? Rotation. And then where to? Don't know. Do you? Here's the other part. Do you really need to know in an environment where you can't know? Why not solve for not knowing and put the knowing to somebody who needs to know in an environment where you can't know? You see? So let's not try to bend trading to our comfort. If you can't get comfort, then you got to bend yourself to the environment you want to operate in. It's like two different forks in the road. Try to make it fit your psychological and emotional needs, which is just about what every retail trader does. We've all done it. Or adjust yourself to the environment you're in. Remember how casinos operate. Their games are based on the environment they're in. They're not based on their comfort. They're based on accepting randomness. But that makes sense. Hit the thumb up, because this is what trading is. And you can learn this in Trader Lab. There is no holy grail or secret sauce. Don't you wish? Sorry, doesn't exist. Ask anybody in Trader Lab. And there's not one way to do this. There is not a right way. The answer, my friend, is in the stats. There's no other place to look. What's this? Isn't this resistance now? Maybe. Didn't we potentially exhaust? And this doesn't mean this is the high of the day. I have no idea where the high of the day is. I won't know, same as you, until hindsight. In the meantime, I have to look forward and think about where the stops were. They're up here. Okay? After that, clueless, doesn't matter. You could be done for the day. And you might go, oh, wait, I want to trade. That's not the business we're in. We're in the business of taking intelligent risk, trading into probabilities, taking out yesterday's high, and we have an outside day. But if the market goes down and gets more shorts in the morning, and then turns around, then you have to think the shorts from yesterday are on the hook. That's why we look at this. So as day traders, it's not about what's the, where's this thing going? Are we in a bull market? Are we starting a bear market? Great question. We'll all know later. In the meantime, what are we doing? These guys. Then whatever. That's all I got for you. You don't need anything more than this, I don't think. Yeah, you know what? The symbol for gold, I don't trade gold. I would like to give you the symbol, but I haven't traded gold in so many years. I'm sorry. But you can get that in the database, or just go to in the chat in bookmap.com, go to the general chat in the Discord server. They can give you that. And as far as the symbol goes, depends on the data source. So there's not one symbol, because you can use different data providers in Bookmap. So there's not one answer for that. But I don't trade gold anymore. When I was managing money, I traded across really the full spectrum. But that was back when I was an advisor. It was trend following. So you just basically put something on and, manage it that way. But day trading is really different. Basically, you're just trading rotations. And even if you're a position trader, you're just trading rotations, just different time frame. But day trading has its own, is different because the time is compressed. The decision-making process is compressed. You really have to know, what you're looking for. Right here, by the way. Here, let me show you this. Now, this is not a short. Let me show you change. You'll notice 212 stops here. We get our icebergs. 20 stops here less, 20 and 3. Where's my buyers up here? You see, I'm running out of buyers. So the market looks like it might be exhausting here. Where's my buyers? It's not a short. I'm just suggesting to you, you got to have buyers. And who are the buyers? Well, the buy stops. Now, where is that over? Great question. I don't know. I don't need to know. But if I'm trailing, I know right here, if I get above it, this becomes my support. I could be out of it here. I could be out of it here. Subject to how far back you keep it. Doesn't matter. Or you're out here someplace and you're willing to give all this back. Me, not so much. I just primarily trade into the other side. So I could be done with it here, but I know there's stops. So I would go further because there's buyers above here. And some traders are going to put it at yesterday's high or 2 points above. You know how it works, right? What do you do? Well, then you just follow it up, and as soon as you see exhaustion, you just blow out of it. Or under here, doesn't matter, does it? You'd get a little extra. You see? I don't fade this. I'm not saying it's not the trade of the century and that we won't come all the way back here. We can come all the way back, but it's not my trade. So for me, I just trade to a target, manage the trade, done with the trade, hang out. David used to trade monthly options. Good for you. I used to trade expiring options myself back in the day where they were quarterly, and that was kind of fun. This is back in the days of the big S&P before we had the minis and then the micros, So I used to, my short-term trading when I was money manager was 2 to 3 day swings in the big S&Ps. That was like, it's close to day trading. Joe, you want me around in Discord for one more year? Well, I don't know. It's always a question for me whether or not I should continue doing it. There's no cost for it, and I am a full-time trader. So when I'm, I don't initiate trades when I stream. I can manage them. That's okay. I can move a stop and do this or that. But put a trade on. I have found I cannot multitask. So I don't try to. I mean, it's kind of like, would you want to take a phone call and be initiating a trade or be checking your email at the same time? That's not a formula for success. I don't do it. But there's plenty of trades. I don't need a lot of trades to do it. I do. By the way, today's very interesting too. What you're going to see, these are called singles. And this is when, these are like internal gaps in a 30-minute time frame. Now, I don't use time, but this is market profile. And this is, and initially I learned market profile before we had volume profile. I learned it when it first was licensed by CBOT. Peter Stoudemire was a grain trader over at CBOT. He came up with this. And it's really a distribution, a numerical distribution of standard deviations of behavior. And he just basically took these ideas of statistics, and if you lay this thing on its side, instead of vertical, horizontal, you'll see like outside edges, the mean, and then it goes off. So when you stand it up, you're seeing this. So that's what he did with it. And basically, we can see a fair price. And then if we leave it, here's another auction. Too high, too low, high volume. This is yesterday's high. What's here? The stops. Now we test it up into here. Now what happens from here? No clue. I mean, in theory, we could come back here or not. That's not important to me. What's important to me is this is this hole here, right here, is resistance. So we can do anything here. As a trader, I don't think about what will it do. I think about what it might do. I know this was the outside edge. In fact, yesterday when we came up here, if you remember yesterday's stream, this was a target, which turned out to be yesterday's high. And then this was the next target. If we could get in here, then we could come across the range. I'm sorry, it wasn't here. It was get in here, and then the next target was there. And this is as far as we got, and then it was south. Today, all we're doing is coming back here. And now, if we stay in here, we have to be still thinking about this and this. If we fall outside, then we can start working our way back down. These are auctions, inside of auctions. So multiple time frame, but no clock. It's behavioral. This is called a single. All it is like a gap on a 30-minute time frame. Remember, market profile, we didn't have volume. So we had time. So it was 30-minute bars. Candles, we didn't have candles early on. We had bars, open, high, low, close. We didn't have candlesticks. I think it was around 85, 87 candles, Steve Nissen. But before that, it was bar charts. When I first learned trading, it was at the CME, and it was classical bar charting. The usual stuff: head and shoulders, pennants, triangles, rectangles. So I thought it was all predictive. So I came into the business learning measured moves. So that sets up this belief that trading is predictive. If it does this, it'll do that. If this, then that. Well, that condition put me on the wrong track, because then it was, well, the market's going to do this, and that's what most of us think. It's going to go here. The market could care less what we think, because it's made up of buyers and sellers. But that kind of sent me a number of years in the wrong direction, just mentioning it to you. But so trading is not predictive, but it is probable. In other words, probabilistic, not predictive. So structured trades are about probabilities and locations and behaviors. And if we can determine an edge based on repetitive behaviors with a random distribution of outcomes, and we measure it so we know where it is, what it looks like, what a trigger is, what our risk is, what qualifies the trade, and the range to qualify the trade to an obstacle, which, by the way, was there, right? Then, if we take our last long, which was down here, and we know we got the range to there with buy stops above, is that a trade that you would take? It's one I would take, and it's one that if you vetted that trade and you're in Trader Lab, you would understand. You need to understand why. And then you need to understand if you have an edge and how to put a conditional process together that qualifies specific trades. Remember, in certain conditions, we would not take a long here. We'd be taking a short. And you're going, well, how can you know the difference? Good question. That answer's in Trader Lab. Because if this was a short here, the target would be here and then back to the mid to take the stops out and get the longs out. What we're doing today is taking a continuation trade to get yesterday's shorts out. Isn't it different? How can you tell the difference? Well, the outcome is random for any trade. But if you knew the difference, you would not be taking a short here. You'd be using this for a long here to go there. Hope you're getting something out of this, guys. Please leave a like if you're visiting in YouTube. Better yet, there's a link down there if you're interested in the Trader Lab. It's currently available at no cost, and I unfortunately will not be doing this indefinitely. Every time I am doing this, I cannot initiate a trade. And as you probably observed in the stream, there's a lot of trades I discussed that, and since I am mentioning larger rotations, they can have substantial potential, like this one, you see. So it's expensive. So if you're interested in it, and there is no cost for it, I mean, you guys have probably done a lot of other things. I'm not saying Trader Lab is going to be the answer for it, because for many of us who want to be traders, we really don't have what it takes to accept that we're trying to compete at the highest level against other traders who have already put the work in and are successful. I'm tell you personally, I know traders who are trading 20 and 50 lots of the minis, not the micros. I've met these guys. I've known these guys. And I also know a lot of traders who haven't succeeded over the years in spite of the fact that they had a shot at it because they weren't willing to do what was necessary They were in a hurry. And when you're in a hurry and when you're jumping from chat to chat, the idea to shiny thing, that's really a manifestation of FOMO. You're in a hurry. What would you want a surgeon to operate on you that was in a hurry and skipped some courses? Think about it. Well, think what we're doing. We're trying to compete at the highest levels against some of the best brains on the planet. I've worked with hedge funds. I've worked with quants. I understand. Now, I'm not saying I have the answers for you. I'm saying is I already know the questions and I know the answers to the most important questions. But you still got to bring yourself here. You got to bring yourself to this. Roll up your sleeves and learn from what you've done. I kind of consider we've all put time and energy and dollars into this. And we all wake up with winning trades and random outcomes. I consider that trapped equity. In other words, think about going to school. You pay to take a class, and then you don't learn from it, and you come back and you repeat the class, and you keep paying tuition, but you keep waking up in the same place. You're not extracting a yield from your experience. You're not changing what you do based on the results you're getting. You're just taking the class again, and you're taking it again, and you're taking derivatives of a class that doesn't teach you how to trade. Instead, you're just waking up with Trader Groundhog Day. That's trapped equity. How do you unlock that equity? I think you have to take your experience and extrapolate or extract the yield from it. If you find you're in a defective process, in spite of your hard work, then it's not you. It's your process. But in the end, you make the choice, you see. Do you keep doing it, even though it doesn't work, expecting a different outcome because you're trying to bend trading for your comfort? I'm going to tell you, I'm uncomfortable every moment because I'm uncertain. But I've learned to detach myself because it's almost like a curiosity. I'm doing what I'm supposed to do. Is this one going to pay me or am I going to take a stop? I don't know. You? I don't know. So I've had to learn to accept the I don't know, but because I have an edge, it's kind of like, well, is this the one that's going to pay me or is this the one where I pay them? The other side. Well, if I keep doing it with discipline and only when I have an edge, just like the casinos, in spite of the fact that there's overhead and cost of production, I know if I do my job, and that's what this is, a job, that over time, maybe not today, maybe not tomorrow, but over time, I have the opportunity to net to the bottom line. Isn't that how a business operates? If you're interested in the business of trading, use the link in the bottom of YouTube. Check out TraderLab. No cost for it. I think the most expensive thing is thinking that somehow we're going to solve trading by doing what others do. That does not work. Everybody has winning trades. We all have. That's what keeps us on a path that might not be sustainable. If you're working hard, leaking equity in spite of the winning trades, which we all have, then it is not your effort, it is your process. That's all I can say. Thanks for visiting TraderLab. Please give a like on the way out. Hope you got something from today, and I appreciate your time and interest and the time you've spent visiting with us here in the TraderLab. Remember, the TraderLab is a community of like-minded traders that come together to leverage their collective experience. There's a library of webinars and a document section. Some of these webinars are up to 4.5 hours long of real-time narration. If you want to see this, market on the run, if you will, and how to navigate it, all that's available at no cost in TraderLab. Thanks again. Don't forget to leave the like, support the channel. There is no cost, so that's kind of a way you might say, pay it forward. Look forward to seeing you tomorrow. Have a great day. And thanks again for visiting the TraderLab.